what we're actually seeing is we're seeing a flight to quality from countries that have difficulties with the economy, so with their debt levels. And we're basically steering towards a sovereign debt crisis. Where does it start? We don't know. It could be in an emerging market country. I believe it actually will be Japan that tumbles first because they have started to control interest rates since it's more than 40 years ago. And it has shown actually beginning of this year, they are not able to do it anymore. So if one country falls, and Japan is a very big country, it will actually work its way towards the core. Next might be France, then Italy, right? The last man standing actually is the US. The US is not the first one to fall, which a lot of people actually think it's to be the case. And that actually means if the US is the last one, that the dollar should remain really strong, right? It's a world reserve currency, and we should actually see net capital inflows into the dollar because it's a safe haven currency. So what this all triggers, this flight to quality, well, we see the big currency shifts as far as Forex is concerned, and we see the super cycle trends, right, as far as futures. So precious metals, energies, and all this. Energies, we've seen it this week, right? Crude oil has just exploded upwards. I think on Friday it made 12%. And we traded these moves, right, in our futures cohort. It's golden decade for traders. Now, this is the US yen chart, right? If it goes up, actually means that the dollar gets strong, and if it goes down, the yen gets strong. So what we see here is that the yen is getting weaker and weaker. The Bank of Japan started to intervene here 2 years back. They intervened here and here and here. Well, we know it from Reuters News. They came out with it, what we see is a Bank of Japan intervention. It's not doing a lot, right? I mean, back here, Asian crisis, they intervened the last time, we saw an impact, but here we don't see. We can see how the pressure in the pot is actually increasing. And now, as we are here at this level, we're at a critical level. If that level falls, well, I bet, and I will trade accordingly, that problems will be so big that the Bank of Japan and actually the government, they're working hand in hand. There's no separation in Japan. They will not keep the pot. I mean, they will not be able to keep it together, right? The pressure is so big. We'll actually move quickly to the 200 level US yen. That's a big move from 160 to 200. Now, early in the year, in January, the 30-year government yield soared to historic record highs, as high as it has never been, 3.9%, pushing up government borrowing cost around the world. We saw an impact on the UK government bonds, etc. So that's a global thing. And the finance minister in Japan came out and said, I'd like everyone in the markets to calm down. Well, that basically means they don't know much more to do, right? They've been controlling yields for so long and building debt, more and more debt. So let's come to that big currency shifts. So how did we know about the weakness of the yen? Because I've been talking about that like years back in the webinar. For those of you who attended it, or you can look it up, I've shown this one, right? And I've said, okay, the yen should lose tremendously in value against the US dollar. Why? Well, because this is a pattern, right? I know about patterns in the market, and we basically only look at the market. We don't factor in fundamental things because it's all printed in the charts. And that is a very bullish pattern, right? Bullish for the yen, well, bullish for this chart, meaning, a lot of yen weakness ahead. It triggered here, and that's basically the stop if you want to trade it. That's the system one pattern, the busted pattern. And this is then how it's developed. Well, we can see a beautiful stop run move, right? These are stop run levels, each of those highs, like a domino. They fall over, stop run move, pullback, very typical, and then it just moves higher. This is the target, right? I'm pretty sure we will get there over the next couple of years. Now this has already the yen has already, or this chart has already increased more than 50%. That's a lot, right? That's a lot for the Forex charts that are traded on on margin. So how did we know? Well, because the pattern was there, and the pattern tells the story, right? Basically. So this is how we actually come to, okay, which are the strongest currencies and which are the weakest currencies of the top 30 currencies, currency pairs we look at. Now, if we look at this chart where we know that the dollar is stronger than the yen, right? Because this is a bullish chart. That's basically what we see here. The dollar is one of the strongest currencies. It's at number two. And the yen is actually the weakest currencies of all of them. Well, and then in in the second level, I ask, okay, what could be the reason? What's the high debt level and the inability actually to control the yields anymore? And you can make this type of comparison based on the higher time frame patterns with all other currencies. Sorry, I've got a bit of a toss. And what comes out of top, I mean, really top, is the Swiss franc. What is the Swiss franc? It's a small currency in a small country. Well, it's a safe harbor currency. There was never a war in Switzerland. US dollar is second. It's a swing factor. It can be up here, but it can drop as well in the weakest currency. So it's a swing factor. What is the dollar? Well, it's the world reserve currency. The euro is up, the pound is up, and on the bottom we've got the yen far, far away. The yen is the weakest. Then comes New Zealand, Canadian dollar, and Australian dollar. Well, what does it tell us? Well, it tells us even if we day trade and if we trade the Swiss, well, ideally we want to trade in direction of a stronger Swissy. That gives us swing potential, and in that way, well, we can build pyramids or swing trade, like hold a day trade for weeks or even months. It doesn't prohibit a trade to trade like against the Swissy, right? But ideally, we would look for the big swings, right? And we are going to see spectacular moves because the top four and the bottom four, like 10 years ago, they were really close together. And now with this pressure in the pot, I mean, they have moved apart. And that polarity creates these flows, right? So flows from the yen into the top four. We see flows from the pound into the euro because the euro is stronger than the pound, right? So this is what we can actually see here from this big currency shift, and that should last. I mean, I update that every year. There are small differences, but that should last basically for the next decade, right? I don't see this change. Like the yen will stay there and the Swiss will stay there, right? So that allows for opportunities. Now let's just pick the strongest currency and the weakest currency. How does such a chart looks like? Well, we looked at it last year at the same webinar. So it was this chart. Again, the patterns tell the story. It's a very clear S1 pattern here. Basically, there was in 2019 entry, stop, and what we see here was a clear-cut stop run move, only a shallow pullback, and it continues up. And we discussed that. I mean, I showed that in 2020, and this was a chart in 2025. And I said back then, there's another pattern forming. It's not ready yet. But if it fulfills its rules, like a breakdown and a rebreak, and the higher time frames are aligned, this could be another pattern setup, right? It already evaluated 64%. And then what we saw actually over this year, well, it created an entry signal and it quickly moved into the target area we had plotted out back then. I didn't put that in now recently. That's from last year, and we have, I mean, spiked basically the target area, right? So the patterns tell the story. This is the pattern on this time frame, and this is a pattern on one time frame lower. So that's a weekly chart. It's a weekly chart pattern, right? Yeah, so the yen is the weakest currencies of all, and it's good to trade it in that way as well. Now, if we combine US dollar versus Swiss, so the Swiss is the strongest of all of them, so we get a bearish chart. So let's just have a look how bearish that looks like. Well, that looks very bearish. I'm talking about this chart since 2017, actually. No, since 2000, no, since 2015, that looks very bearish. and we triggered. We triggered a signal, it came back, it triggered again, triggered again. Well, it's taking a long time, but the original stop up here never got broken, right? It's still valid. And we had another pattern forming, and it's basically taking a long time. But there's a lot of energy stored, right? And if that starts to move, and it starts to move when this week low gets broken, we will see monthly bars, bearish bars that look like this, long stretch, really big bars. So there's a flight, right, of capital, international capital, that goes from the US dollar, the world reserve currency, into the Swiss franc, which is rare, right? We were wondering back then, how could that happen? What would make that happen, right? That money, international money, goes into the small market, Swiss market. Well, now actually I get a better idea because the US is involved in a war, right? And we've got tariffs and all these things. So there could actually be international investors, or it could just be European investors who say, we don't park money in the US dollar zone or in the US. We go into the Swiss franc, right? And we should see that. I mean, now we're at 0.80. It should at least go to 0.60. That's a big move, right? So I not always get the answer. Why does it happen? Because we were discussing that back here. We had no idea, right? But actually, it gets clearer and more clearer, especially now with the Iran war. Switzerland has never been in a war, right? Okay, this is euro pound. Euro is above the pound in the big currency shift. So what we get a bullish chart, and we should get a bullish pattern. And here it is, right? This is a bullish S1 pattern as well. It triggered in 2025, and that tells us the euro should do much better than the pound, and it has the potential to increase in value by 30% relatively, right? Euro versus the pound. I have no idea why that should happen, but it's going to get revealed. It could be war related. I don't know what's going on there in Britain, or what is going to happen in Britain. The patterns tell the story ahead of time. This is a nice thing, right? Now this is pound, so it's strong, relatively strong. I mean, it's not super strong, but it's in the top four against a weak one, the Australian dollar. And what we get, well, we get a bullish chart for the pound and a bearish for the odd, so it goes up. And what we have, again, we've got an S1 pattern, a bullish pattern, with the target up here. We have broken the consolidation high. That's always an important. We're currently in pullback mode, and we should continue this rise from $2 to 260. That's a big increase, right? That's like 20% increase. So no, well, yeah, okay, from current levels. So that's more. So that's quite a big move. Now let's have a look at this week's opportunities. This is from Duncan. He's in our master's class. He trades both Forex and futures, but actually prefers Forex. He's in Australia, and this is the trade he took. You might recognize it. We've got a momentum move and a long stretched multi-bar pattern. This is an S1 entry and stop. Very low risk idea. We like low risk ideas, right? And this is the stop run level, and this is the stop run level. When you get into a trade like this, well, you basically want to run over the first one, then gain momentum, and then break the consolidation high, and then continue in oval trend direction. We're trading out of a 5 chart layout. Now, this is a 5 minute chart. This is 15 minute, 60 to 40 and daily chart. And they have to align. That's part of the rules. Like one time frame higher has to align with etc. And we can actually see, and that's what Duncan spotted. We have a really nice level here. It's a stop run level on a daily chart, and if that breaks, well, it can develop into a big move. So what happened? So we can nicely see here on this 5 minute chart. Didn't go off immediately. It's kind of not unusual. So that's a stop run move, taking out this high. It pulls back, very typical. And then we've got another stop run move, taking out this high, right? And Duncan, well, the weekly target is 2 hour, and Duncan was basically, I mean, banking in to reach consistency for the week, and that was a 2.3 trade, 2.3 hour trade. And yeah, very well done. That probably went higher, but consistency is most important. Now, this is a trade I took this week. That's an S2 pattern here on a 5-minute chart, short. This is entry, this is stop. Now, this is an S2, right? We've got a momentum move and a consolidation. And we see something similar, 2 time frames higher on a 60, momentum move and consolidation. And we are right here at breaking the red line. Now, I'm basically front running. This is a bearish pattern. And this is a bearish pattern. I'm basically front running the break of the line here that should develop momentum if it works out by taking an early entry and a very tight stop, right? When that stop is basically what we see here is the high of this green bar, right? This is a very tight stop. And if it works, well, this will basically move into this area and give a big R multiple plus. We've got stop run levels here, etc., etc. I really liked the trade, knowing that this is a make or break, right? Either it works or it could get stopped out as well, quickly. And that's basically what happened here. It started right in the right direction, and then that's a stop out, and that's fine, right? That's a make or break has a lower win rate and a higher potential R payout. That's not the type of trades you want to take like the first trade of the week. If you're already up quite a bit and you can digest a 1 hour loss, but you could get a bigger multiple, well, that's the type of trades you can take. Now, this is the trade from Menno this week. It's actually Tuesday this week. And Menno, who knows Menno from a prior webinar? Menno from the Netherlands. Okay. Menno, he traded the EuroCAD short on the 1 minute, and that's an S2 pattern. So we always have the momentum move, a multi-bar consolidation. And what we see here, well, what type of trade is that? Well, it's all time frames down, right? Downtrending. So we're basically, going with the trends on a 1 minute chart. And that's what we see, what happened. He took it here and it went quickly to his target. And he got out here because his trading game is once he gets his weekly targets, 2 hour, he's out and he's done for the week because he's got other things to do. And he was done Tuesday morning. And that trade on a 1 minute chart, that took only 40 minutes, right? That's his trading game. And Menno is a prop trader. So he can leverage the capital. It's a very nice trade. It went further, right? But his trading game is to stop at 2 hour, and that's absolutely fine, depending on how you define your trading game. Now let's talk about, okay, I'll show you what opportunities could come up for the next week. US yen. Well, if I see US yen, ideally it's a bullish. I want to go long, right? US yen, and that's what we have here. It's a 60-minute trade idea, an S2 pattern. Again, we're looking for multiple touches on a horizontal line. We don't trade diagonal lines, only horizontal. S2 pattern, this is a potential entry. So we need bullishness to come in. This is where the stop goes, nicely protected. And we're basically, this is the trade idea. Here on the daily chart, we've got a really nice stop run level. This is an important high. It clusters with these other highs. Plus, we've got 2 more levels higher. That could develop. I mean, we could get 1 big daily bar. We could get a series of 3, 4 daily bars that basically cut through these levels. And you can check, right, end of next week or in 2, 3 weeks. That might take that long. Currently, there's no stop run move yet. If a stop run move happens above this level, we will be somewhere here, right? And then this comes really close. They act as a magnet, and we might get through like within 2 days. We might be somewhere up here. Well, it would be nice to get a low risk entry, and that is a low risk entry for this trade, right? for this trade idea. And there's even another stop on level on the monthly higher. So if it breaks the 160, so the 160 is here, the green line is 160 here. If it breaks that, we'll be somewhere up here, right? So this is a trade with swing potential. Definitely, I'll have an eye on that. I would like to take that. Now the other idea is the cat Swiss as well on the 60 long. And well, sometimes you see a lot of S1s, sometimes S2s. It depends, right? It's as they come in. And this basically entry, stop. We're basically looking for a second leg higher, one leg consolidation. That's what we see here. We're looking for a second equal, like of equal distance, right, higher. And if we look one time frame higher, well, that would actually bring us up here, right? If you multiply, if you duplicate that move, well, that brings us somewhere here. That means that 200 gets spiked. It's a stop on level. This would get taken out. This would get taken out, and the big number. So there are a lot of stop run levels here, and we could quickly move to 0.59. So that's another trade idea that has swing potential based on a low risk idea. Okay, now the question is how to trade the big shifts. Well, it's important actually to not get confused, overwhelmed, and not get stressed. And basically providing this information that we should get big shifts, we should get more volatility, more uncertainty, more wars, right? That's not the last war in Iran. That adds more liquidity and more volatility. And if you're prepared that this environment will actually intensify, right? Then well, and that the shifts are coming and accelerating, well, then you can prepare mentally and elsewise. So what do I recommend? Well, I recommend it's a really a good environment for traders and investors. I recommend to become active trader. Active investor. A lot of people will be confused. So if you're not, you already have an edge, right? Things will intensify. Already said it. We'll get civil unrest as well, more market volatility, and the volatility is a trader's best friend, but only if you're not confused, stressed, or overwhelmed, right? So what we do in the community, we actually don't care much about news and fundamentals. We care a lot about the visual patterns, the price patterns, because the patterns tell the story. And I've just showed you a couple of examples how they told the stories over the last years. And we trade the trends, right? Yeah. So what works well is to trade, I mean, because these patterns are independent of the time frame. The markets are fractal, and we see the exact same pattern on a 1 minute chart, on a 5 minute, on a monthly chart, on a quarterly chart, on an annual chart. It doesn't really matter, right? So you can basically trade either the time frames you like. Menno actually likes to trade the 1 minute and 5 minute charts. He's a prop trader. Or you can say, I've got more the investor perspective. I like to trade the 60 minutes, 240 and daily charts. That's absolutely fine, right? With these shifts coming up, you can do even better trading the higher time frame patterns than the lower ones. It always depends on how these moves are structured. So I recommend, and that's what we do. We trade what we see. So we see a trend and then a pattern that forms that allows for a low risk idea. And then we manage the exits. We've got a very clear exit algorithm. There's no second guessing. And that's the nice thing. These shifts, especially our big picture outlook, and I made a webinar in January this year, that happens on a global scale. And it's actually something the world has never experienced before, right? On a global scale. We're going to see something very special. I mean, this is a thing of a lifetime, and it's good to be prepared, right? So it's about getting ready. There will be unique trading opportunities, be it Forex or crypto or futures. I mean, we had silver. Everybody heard about silver. I mean, we have a couple of masters trader futures, I mean, who became financial free just with silver this year. Well, including myself. I made so much money that again, if I were not, I would be now financial free. So these are really opportunities, right? If you only catch one or two of these big moves, um, this is something, I mean, you want to capitalize on. That's not going away soon. It's going to last 9 or 10 more years. So there will be many bubbles forming in the forex markets and in the futures markets, including cryptos. Um, well, that's it basically. A lot of people get stressed, some even angry when I talk about the big picture outlook, and when I talk about wars as well. But it's actually important. You don't need to be perfect, right? In such an environment where everything moves, because most traders are freezing and investors. They're getting scared. They're getting overwhelmed. They don't know what to do. Well, then they don't do anything. So you don't need to be perfect. You just need to be slightly better than your counterpart. And if you know about these things, and you trade your system or you're getting prepared mentally, well, then you already have a big edge, right? And it's about enjoying this huge and incredible ride. We're already in, but it's getting bigger. Um, and it's what Van Tharp is famous about. What's about being in a good mental state, right? That's important, internal control, and that actually helps to know about what's going to happen. Okay, now we come to the Q&A part. Let's hear what your questions are, and after that, I'm going to talk about the upcoming Forex workshop, and we've got just a few seats left to close the cohort. I like to have small cohorts to be able to dedicate, more personally. So let's hear. You can either speak out or write in the chat. Sati, I would like to ask you. I know you're a more private person, but what I say about Japan, do you think this is right, that Japan is in trouble, or do you think everything works still fine, Sati?
I'm not sure because people say no, Japan is okay, but I don't know, something is changing, so I just wanna hear about it.
Something is changing since beginning of the year, right?
Yes, yes, because
Yeah,
yes, many things change, and law, and also law is changing too. So let's see what will happen.
yeah. Pressure is increasing on Japan. Yeah. Okay. What else? Questions?
Gabrielle, with the currencies, do you trade spot or futures, or what do you use?
Yeah. 1 second. Second. You can actually trade futures and spot on margin. I trade actually spot on margin,
Okay.
but if
Sorry
you're a
about your.
futures trader, that's absolutely fine to trade currency futures. But still, I would do charting on the spot forex market because the currency futures, it makes only 2% of the overall forex market. You get false signals, right? If you trade out of the futures chart, you still would need to do charting. Your signal comes from the forex chart, the spot chart. Then you can execute with the currency future. It's absolutely fine.
Thanks.
Okay, David is asking. Hi, David. You're part of the cohort. You mentioned the Saber market. Not sure what you mean. Saber market. I don't know. What?
I thought you said saber market. Maybe I heard it wrong.
Silver. Okay, silver.
Oh,
Thanks,
silver.
Patrick. Silver.
Silver.
Yeah,
Okay.
silver. Well, the
Okay.
exponential rise in silver.
Oh, yeah.
Uh,
Okay. I got you there because I've been
that's a
following
stop
it.
run move. We were not
Yeah.
surprised by that. Yeah,
Yeah. Yeah.
silver. Yeah.
Yeah. Okay. Thank you.
Okay. Now it's oil, right? Um, I positioned in oil this week for the long, for the next couple of months, because I don't think the Iran war is over soon. Certainly not in a month, within a month. It's not only the war is just a trigger. We have a pattern, right? On the I think it's the month on the monthly chart, and we've got stop run levels on the monthly, and we should move pretty quickly to the $100 level, and then we see from there. How about Bitcoin, Sati? Well, Bitcoin is in a bear market. I think the exponential up leg ended. I think it was at the end of last year. I'm completely flat cryptos. I owe nothing, just US dollar stable coins. And we need to wait for it to bottom. I think we're halfway through. It should drop like to the 50, 30, $50,000 level. That's what I believe. Then I'll start to accumulate again. We're not over. Okay. I mean, if you have questions, you can always write me. Now I'm posting because some of you did not attend this webinar on the geopolitical realities. That was in January. There was no war, but we're talking about war in that webinar. Then I can put you a link of Menno, if you haven't seen it. Menno's breakthrough. He attended last year's Forex workshop, and he struggled for many years trading. Just putting the link. And within less than a year, I think 6 months, like applying a little bit practice and the simulator and all of that, the teachings, he had a major breakthrough. And Menno is going to talk at this coming workshop on day 2. He's our guest speaker. And I've got a link here, like a 10-minute video. And then we have Menno and Michael. Michael attended 2 years ago, and he's now a professional prop trader living in Thailand. And he's 19 years old. Just putting the link. He's 19 years old and trades multiple stacked prop trading accounts. He's very successful. He attended 2 years ago as a complete novice. So that's always like something beautiful for me to see and to help out with novices. Some novices can develop really quickly, and Michael is one of those. He's become a full-time trader in no time.